XRP Ripple, is it ready to ripple to the moon? That's what we're going to find out today. Now, what we're going to do is dive in to the website first. By the way, if you don't know who I am, I'm Jagir. We're going to look at XRP. The website, let's just remind ourselves of what XRP is. So how it denotes itself is the best digital asset for global payments. XRP offers financial institutions the fastest, most reliable option for sourcing liquidity on demand. It's been about for a while, XRP. How long has it been about? If we look at CoinGecko, we go way back. Their first data was all the way back in 2013. So it's a mammoth. It's been around for a while, and it did incredibly well in the last bull run, and it did a nice correction, and we are where we are today. And today's market cap on CoinGecko is $30 billion, and we are with XRP ranked in the top 10, right? Top 7, or it's number 7 according to CoinGecko based on its market cap. But what we're going to do today is let's look at the chart data. Now, what I want to quickly do is just remind you the psychology of the market repeats itself over and over again, and the market is normally moving a 1, 2, 3, 4, 5, and then a nice A, B, C correction. That's most typical, is most classic when it comes to human psychology, mass psychology represented in the markets. That's what Ralph Nelson Elliott discovered in the 1800s and the mid 1900s, and it applies really, really well to crypto, especially when combined with Fibonacci. So I've done it for you already. This is like Blue Peter. If you remember Blue Peter, here's one I prepared earlier. It's done this big move up, wave 1, broken down to a 1, 2, 3, 4, 5. And then looking at the today's data, it looks like a nice A, B, C. But what we're going to focus on is this part of the move. This part, can we narrow this down to see, is this a likely low and what's likely to happen next with XRP? Because I know you've probably got XRP in your portfolio, right? Most people have, especially if you're new to crypto. I found that most people tend to buy XRP. So let's have a look. So I'm going to quickly write you some. Let's just keep it simple. So zoom in. Let's just keep focused. The main thing being the main thing. What do we see here? Right. With a wave C, so this is what we're regarding as a wave C. I'm going to make this really, really clear for you, as clear as I can. This down here is what we're seeing as a wave C. Wave Cs typically break down into 5 waves, and there's a relationship with the first wave, the second wave, the third, the fourth, and the fifth, which allows us to use Fibonacci ratios to project forward in time when likely that the wave 5 of the wave C is going to end with high probability. That's what we're looking for. And we can use that information, whether you're holding XRP and you want to just feel more confident what's likely to happen next, or if you're looking to buy XRP, or if you're looking to exit your XRP. So let's have a look. What we're looking at here is a nice wave 1, a wave 2, nice clean 3, A, B, C, 4, and looks like we're coming towards or at, let me just get rid of that, at a wave 5. Right, boom. Nice, simple, clean. Right, let me just put that there, boom, boom. Yeah, makes sense. Now we've got a question mark. So it's a wave 5, which is this part here, wave 5 of this whole C, of this whole wave 2. So let's get rid of this. So what we're going to just finish up on is 2 things, right? Give it right to the point. Get right to the point. First of all, we're focused on this part of the market, right? I'm going to make this really, really clear. This is the low. This is the beginning that we're looking at the beginning, and we're looking to project where's the likely low in this area over here, right? Where's the high probability? So first, we're going to look at the macro picture and do a retracement. Now, with Fibonacci ratios, wave 2, typical wave 2s, there's a minimum ratio. Minimum meaning the typical minimum price pullback. And this is people taking profits. This is people doing different things for different reasons. But the typical minimum is 50%. We can see we exceeded that. The next typical minimum is 62%. And that was like the first wave. And the typical maximum is 78.6. And you can see we're right in that zone, which is important. So that's the macro picture. Now let's go in the intermediate. What's the intermediate? Well, the intermediate is now looking at this part of the market. We want to see what's the relationship with wave A and wave C. There's a relationship between the two. And there's 2 ratios that we want to look at. So let's just look at this. Let me just double check. Boom, boom. Yeah, so I'm just looking at alternative wave counts because this is the nature of the markets. You look at this as A, B, C. I would have thought this was a C before. We had a bit more of a move up, and hence the wave count changed to 1, 2, 3, 4, 5. So that's what we're seeing down here. I was just looking at this for a second. Yeah, perfect. So let's have a look at the intermediate wave count. So we're going to measure wave A, the high, the low, and project it forward to say the typical wave C is normally the same as wave A, and the maximum is 1.618. And you see that's way below the 78.6% retracement. So now we have a cluster, and they're not too far apart. So that's the macro picture and the intermediate picture. And now we're going to finish up on the micro. This is where if we get a cluster on 3 degrees, macro, intermediate, and micro, then that makes it a very high probability trend reversal, especially when it's combined with pattern. We've got price. I will do a bit of time and then we'll finish on momentum. Normally I begin on momentum because that qualifies the trade in the first place. But now we can just do this first. Let's just focus on the price initially. So we'll focus on this part of the market now, this part here. So we're going to go, let's measure this wave one, beginning of wave 1, end of wave 3, and projected forward from wave 4. And wave 5s typically are 62% to 100%. And you can see the 62% is right in this range, right? Really almost tagging the 78.6% retracement on the macro degree level. And this is the micro degree. So that tells us there's a high probability that we're going to come close to an end of a wave 5 of a C of a 2. Then we'll do a couple of others. The next one is going to be the wave 1. We're going to use the same one. We're going to measure this wave 1 and project it forward from wave 4. Now the most common relationship between a wave 1 and a wave 5 is 100%. As in wave 5 is often identical or close to identical as a wave 1, and the maximum tends to be a 1.618. And you can see that is in that zone again, right near, just above that 78.6% retracement. And then last but not least, this is more of a confirming indicator, which is the external retracement. That is wave 3 to this wave 4, and it's 1.618 and 1.272. And you see the 1.618, which is a typical maximum of a wave 5, is right in that zone again. So now we've got a really high probability price cluster zone, which is typical for an end of a wave C and an end of a wave 5 and an end of a wave 2. So that's high probability, this zone over here. So now let's just go to do some quick time analysis. Okay, we can keep it quite simple today. We're just going to take this low, the beginning of this, what we're seeing as a wave 1, and the end of this wave here. Boom, double click. And the two numbers that we're looking for, first of all, to confirm that the correction is likely, most corrections wave 2s are 50% longer than the wave 1. Not longer, at least 50% of the wave 1, the distance. And that's what this line is here, right? So we said we've exceeded 50%, so we're now likely to be in the correction zone. Whereas when this low was being made as a wave, potential wave C earlier before we had this new data, it hadn't exceeded this 50% zone. So it's unlikely that that was going to be the end of the correction. That's important information for us. And then the typical maximum, well, typical zone is 62%, and the typical maximum is 100, and then the absolute maximum is 1.618. But you can see where we're quite close to this 62%. Get rid of this one, and this is the 100% down here, right? But we're right near this 62% as well. There's a couple of other things we can quickly do. Shall we do it? Yeah, let's just quickly do it. I think it'll be valuable for you. It's going to be the 100% low to lows. So this is the last major low before this potential low. So we're going to measure this low to this low and project forward 100%. If I can make sure I get it. On 100%. Let's just make it a different color. Let's make it, just want to make it, let's make it thicker. Make it thicker. That's the thing. Boom. So the thick red line is the low to low, right? So we're taking this low to this low and projected it forward again. And we're going to do the same over here. We're going to take this low to this low. And these are like time rhythms, right? Rhythm. The rhythm of XRP. You know, even taking this low to this low and projecting it forward from this low. And what we're looking for is a cluster, like a minimum and a maximum. And then we do one last one, which is this low to this low, projected from this low. So now it might look like a load of random lines, but we can say that the minimum, which is like an outlier because it's way past it already, is this one. We can get rid of this one. Now we have a relatively tight cluster. So what I like to do is to say, right, in this zone over here, this price zone and this time zone, we should expect to see the low of XRP. And as we've already exceeded these prices, we can get rid of this one. Even though it's valuable information, it's past that already. And we can get rid of this line just so it's a cleaner chart. And then we can kind of go, right, we're looking for XRP to reverse in this zone over here. Let me just turn this off. Yeah, it's a really tight zone. The dates are, this is a daily chart. The dates are from the 18th of June and the longest being the 30th of June. So what's that? That's 12 days. That's 12 days. But now we can rely on momentum. So now let's just dive into the momentum indicator. So weekly is oversold. Daily, both the fast movement of the daily and the slow movement of the daily are both turned bullish. So we should be at or near the completion of XRP's low. So how would you trade this if you were trading this? So first of all, you know, if you're not trading this and you're just buying and holding XRP and you just want to know what's likely to occur next, you know, what's likely to occur next. Let me just do this. Well, first of all, we just go the next, after a wave 2, we anticipate a wave 3. So, and just so you know, we're using daily closing data. There's no real wide bars on XRP, so it doesn't make that much of a difference with this particular chart. So we're going to just do a projection, because I know you love price projections, right? Now, I don't forecast for the sake of forecasting, but we're doing it because we want to have an opinion of the market. Measure wave 1, project it forward from the potential wave 2 low, and the price anticipation, or if it was a wave 3, is 1.618. So that is $3.17. $3.17 would be our opinion, and that's what we expect XRP to reach over the next 3 to 5 months. 3 to 5 months. Well, even if we look at it from here, sorry, here actually. So I drew this in the wrong place. It should have been here. This January, yeah, 5 months. Typically, a wave 3 is around the same length as a wave 1. Sometimes as long as a wave 1 to wave 2, all that distance. So we can project that forward in time. So in fact, you know, to keep it really, really clean, we can go measure this. This time is taken to form this wave 1 and project it forward from this potential wave 2 low. And what you have, these are previous. We can ignore. Oh, that was the one. So we can ignore this one. Just get rid of this. It's not that relevant. So we can say, right, we anticipate year 3.17 by September. By September of this year, September 2021, which is where are we now? June to July, August, September 7th. It's around 2.5 months. We could see a wave 3 unfold. That would be the projection. And then if you're looking to buy XRP for the first time or looking to add to your position, if you're using a stop loss, then the stop loss would go under what we're seeing as the potential wave 2 low. We've got 2 bullish reversals, and we only need one, but both gives it more higher probability. And then an entry point would be, if you're sticking on the daily chart, if I just zoom back in, let me just zoom back in here. Let's go back to the candlesticks. You want to, either you can go on a 1 bar high or on a swing high. Yeah, it depends on your trading strategy, so I won't go into that too much detail. What will be the first major indicator that will tell us that we've achieved, give us confidence that the wave 2 has reached the low, is if price closes above this previous swing high. So there you have it. XRP, is it ready to go to the moon? Possibly. It's a strong project. You know, it's been around since 2013, a lot of credibility. And as we read at the beginning, the best digital asset, as XRP says on their website, for global payments. So it's great for banking and other things that they're doing out there. So let's finish today on a quote. So I've been reading, I haven't read it for a while, to be honest. I'm just looking for quotes. Let's just pick out a random one. Think and Grow Rich is a book that I used to study back in the day. All right, I'm staying neutral in terms of religion, but God is in the first word of this quote. So I'm just giving you a heads up. So Think and Grow Rich. This is chapter, I think it was chapter 6, end of chapter 6. God seems to throw himself on the side of the individual who knows exactly what he wants, if he is determined to get just that. See you soon.